Ladies and gentlemen, K-Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is down about 1.1% there. On the S&P Nasdaq, 2.1%. Semiconductor, same. Dow held up a little better. Russell 2000, 2% negative. Transport, banks, energy, biotech, healthcare, home builders, retail, and emerging market. All these guys are printing red numbers. Notably, the retail and emerging market did get hit harder. Much harder today. Looks like utilities is only sector printing green number. Bitcoin did get hit 7% negative. Gold, silver, miners are red. Dollar up, oil down, treasury bond up. VIX popped about 6% there. Let's stick with the S&P 500 ETF. Spider 65-minute chart here. So this is where we closed on Friday, and it looks like we opened here today this morning, and there's a little bit of fluctuation on the first hour. Pretty much grinded all day long, and looks like that the short-term moving average been kind of helping the buyers here to make sure the price do not get any lower, it looks like. But on that third and the fourth hour, it looks like there's a little bit of advancement. Bulls trying to get up here, put up that little bit of courage to get up, potentially fill this down gap. Well, that attempt was quickly shot down. And you can see that micro-term moving average that has been acting as support last couple of days, been acting as new old support, acting as new resistance, not to mention that gap area is going to provide instant resistance. That's kind of like a double resistance. So you can see on that fourth and fifth hour, quickly, that bullish move was shot down. Bears brought it down. However, the short-term moving average that did act as support back in, I don't know, last week or so, is acting as support here today. So that 383 pivot is going to be the important level of interest going into tomorrow. That's the prior resistance, prior support, pivotal area, and bulls must protect this level if they do not want to see 379. Because if we lose 383 going into tomorrow, bears will bring it down to about 379. 379, you can see that my midterm moving average is currently residing in that vicinity. Currently though, with this down move, you can see that, here, I'm going to zoom out a little bit. This, we talked about the last Friday that this is important level, right? The 389, 390 level, right? That's important pivot. Bulls desperately needed to break above that level, right? And because this is a strong resistance, strong pivotal level, because we've been respecting this vicinity since June, and now we were not able to get above that level, and rather we also, we have now a down gap that's open. Things are actually looking hectic here for the buyers unless bulls can get up and fill this gap as quickly as possible. As long as this down gap remains open, bears will continue to push, and bears will utilize this downturn, this jump start to the downside and ultimately, bears want to bring it down. And if you're a seller here and you wishing to see much more blood in this market, 383, 379, and ultimately there's an up gap. There's one up gap, only up gap that currently remaining open is this one right here that was opened up back in late June. So you can see right now, and obviously bears got a whole lot of gaps. There's this down gap here, this down gap, but there's huge down gap that did get filled right here. Unfortunately, bears opened up another down gap. It's not as big as this one, but it's still down gap. That's what I'm saying is bulls need to fill this down gap as quickly as possible. They need to go up and fill this down. There's a whole lot of things that buyers need to do before they can change the overall sentiment of this market. Because we're still dealing with kind of a midterm downtrend here, right? So we're still in this vicinity. We've been kind of, in this range for about 2 months or so. And so this is a level where bulls don't react as quickly as possible. Very, very fast. Bears can bring it down to 379, 370, right? Let's check out that oscillator. See if we can extract any more information. That oscillator is rolling over, right? And it's looking similar to this right here, right? You can see that we got to the near to the overbought level, right? What buyers needed to see was to, you know, have this oscillator kind of get right back up. Maybe something like this right here. A little bit of sideways. And then maybe push it one more day, right? We didn't see that. Instead, we just kind of rolled over. So now this is looking something like this. So last time when we did something like that, you can see we did see another downturn. And so if you want to draw some sort of support here on that oscillator, you can see that oscillator is not overbought yet. We still got a lot of room to move to the downside. That means the bears, they can push it one more day. And the fastest way for the bears bring it down, just because we're sitting right on that short-term moving average, is to gap it down so you don't even have to deal with that short-term moving average and the mid-term moving average just beneath that 379. So this is a level where unless bulls can act as quickly as possible, filling that down gap that opened up this morning and reclaim that micro term, we will see 379. We will see much more bloody red days. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and go trading tomorrow.